All right. Hello, everyone, and welcome to another live show here over at Pepperstone. Today, we're going through everything from stocks to commodities to, of course, cryptos and currencies. Guys, it's volatility, I guess Wednesday, you would say, because there certainly is a lot of vol going around, and the stock market is probably at the center of all of this. And in today's show, we'll break it all down. Some exciting stuff, Tyrone. My name's Thomas. How are you feeling this week, Ty? You enjoying this market movement? Probably what we expected, to be real.
It is what we expected. Welcome, everybody. Yeah, and look, finally, it's good to see some half-decent movement, actually. And I think it's probably the beginning of some decent trends. So, yeah, looking forward to getting into the TA and actually seeing if we can identify some pretty good opportunities that I think are presenting themselves.
As always, guys, if you have questions throughout the stream, we do have some questions already I can see there. So thanks very much. Then make sure to put them in the comments or the chat and we'll answer those. And of course, don't forget to give it a thumbs up if you enjoy this type of content. Got a quick risk disclaimer. We'll be back in just a second with the charts. Okay, so the S&P, Tyrone, this is a level that really we saw on multiple indices and it was showing across the board. And I've got a good little tip that I think we've shared before on these streams about how you can start to see S&P weakness maybe starting to show up before it even does. Now, of course, this looks like what we call distribution. This was a very good sell level, which we'll go through in a moment. And one of the signs of weakness that already was starting to come into it was this little blue line down here. Now, if you're using Pepperstone attached to the TradingView platform, which is actually a question we may be answer very, very soon, Ty. But basically, if we have that, we can use what we call an advanced decline line. And basically, this is something that's built into the TradingView platform. You'll be able to attach it through indicators, and it will show something like this. Now, what you might notice is that as we're peaking off here in the market recently, we were actually seeing this start to slope down. Now, if it's sloping up, that's not a bad sign. If it's sloping down, that's actually telling you that of the S&P 500 stocks, there are more stocks declining than going up. So it's probably telling you that there could be some theoretical weakness underneath the hood. And it's a great system for swing traders in particular and investors to be looking at this. If it's all going up in a nice straight line, usually that means the trend's really intact. If we're starting to see weakness and we're going sideways, then we have to start questioning everything. And of course, you can put a big question mark on it. So that's a good little top tip to get started, advanced decline line, and something you might want to put on your charts. Another one that I think is really good, Ty, just to go through here is the RSP, the equal weighted markets. So this has already been showing us for a couple of days. You can see in specifically last Thursday, we saw some weakness in the overall market. And maybe that's why right now we're also finding that little bit of weakness. So yeah, just a couple of signs of how you can see internal breadth a little bit more easily, I guess, with click of a finger inside the platform. All right, so I guess you probably like that stuff, Ty, but let's go through this S&P 500. So many different signs of weakness. One of the first ones was that we actually had large transactions that continued to occur at this level. And you can see here, I've written most traded zone. So basically what this is it's the most traded zone throughout this entire range. And we found that last Thursday, we ended up getting this big sell. So we often say patience, react, don't predict. Tyron, was this like a case where we actually got a chance to get in on the bear side because we were patient?
Yeah, I think it was actually. And I know a lot of people did get involved in this one. I think sometimes, look, a lot of people are a little bit scared to actually get down to the smaller time frame sometimes, Tom. And yeah, they look at the bigger ones and say, all right, well, yeah, it obviously shorted, but we weren't able to get into that because it's a bit after the fact. Sometimes the daily can look a little bit after the fact, but I think that the clues were well and truly there. I think we've been talking about it for the last week or two, really, how the weakness was starting to set in a little bit. But it's difficult to identify those weakness opportunities if you don't go down to the smaller time frames. I mean, you can see here clearly on the 2 hour that it came back and touched the zone that we know was a very important zone. We talk about this all the time. And realistically, once it did that, it's all about that. Yeah, it's like that role reversal that we talk about. Yeah, once it goes through, comes back and retests it from below, it makes it the better trade. And yes, this is the 2 hour. It's given us the opportunity, but really these opportunities are everywhere. I mean, you could go to the 4 hour and you'll see weakness on the S&P 500 as well. You'll see, MACD divergence. You'll see all sorts of clues to say that, you know what, this market was starting to already keel over a little bit. Now, yeah, it doesn't mean that it's Armageddon and it's going to, sell off, to the next recession. No, of course not. It doesn't. I would not guarantee that's going to happen. But what it's doing, though, is giving us the opportunity to participate in what could be a reasonable pullback, a very tradable pullback. And I think that's pretty important. The market has been anticipating it for a little while. But if we look at the 4-hour here, we can see that we're starting to get some really, really big, strong action. We can see that the price action is well and truly under the 20 moving average. Now we know that. But I think, Tom, we're approaching a very, very important zone. And I think that 5250 area is an extraordinarily important zone for this S&P 500, because if this fails to hold it, I think that the next level is actually considerably lower, and I think the 5,000s are in danger. I think if we get break past that 5250 actually, so I think we're going to be watching with a great deal of expectation at the 5250, because if this level doesn't hold, I think that there's a potential for potentially a 4 in the indices, and that's going to upset some people, and that's okay. Direct all hate mail to Thomas.
Oh, well, I didn't expect it to be that low. So to me, I think we've still got a couple of key levels. So I guess I'll go through mine, and this is good because ultimately when you see technical analysis on the charts, like Tyron and I obviously see very, very similar signs of weakness, but have maybe slightly different initial targets or even ideas of how weak it could really get. So the first one here is I agree with the 5250 tie. This is a very important point, and basically, we have a few things I've written in here. We've got put support, which basically means there's a bunch of 0 DTE option expirations that sit all around here. And then we have a 1-day expected options move. So plus, we've also got the support of the previous structure and this demand here. So is 5250 key? Yes, it is. And at this stage, the market's kind of looking like it might want to go and touch that maybe later on in the session. We'll find out. Now, from that point, though, where's the next level? Well, we have already tested this once before, which may make it weaker, and that's that 5185, 5200 zone. So I could see the market easily getting down to here. Maybe there's some buyers around this area, and if it fails here, then it is, then it's really getting nasty, isn't it? And at that point, if you actually look at the left-hand side, I think that's where Ty's getting that next big number from, because there's nothing there. There's almost nothing to support the market from this point all the way down to here.
I think 49.50 is the key level, really, Tom. And the reason why you might be wondering where did he pull that from? It's actually looking at the weekly. The weekly is probably the key chart for the US 500, I think, in terms of where it might go, because it's the one that's giving the biggest sign that there is definitely divergence here. There's no question about that. So if we just go out to a weekly for 1 second and we pop a MACD indicator on, we can see that we've got what is actually starting out to be. I'm going to pop it up on. Can we pop it up to a weekly and pop the MACD indicator on there? That'd be great. This is a potential very large evening star setting up. And we've got MACD divergence. There's no question about that. And it's a weekly chart is a big deal, obviously. It's a slow moving chart. We know this, but it's giving us the opportunity to potentially look at a pattern that it rarely appears on a weekly chart. And when it does, its fulfillment will be quite close to the 49.50, which is what we're looking for, really. So I think that it's a bit of a move, but look, markets can move very, very quickly. I know it looks like a long way away, but at the end of the day, in the grand scheme of things, it's only 300 odd points from where we currently are now, which is actually in the grand scheme of things just a reasonable pullback. It's not even an aggressive one.
Yeah, so that wouldn't even put us in a technical downtrend or anything. You'd have to really break underneath 49.50 to even consider that. So, and that would still be only mostly on the daily, though it would be considerable, I think. So at this point, with the earnings season kind of gone through the biggest stuff, we've moved to the catalysts now, and obviously Nvidia was the catalyst of a lot of bulls coming into the semiconductors, which we'll talk about later on. But yeah, very key point here. And I think it's moving a lot of the markets. We'll go through gold, dollar, a few other things in a moment. Let's give a shout out to Selva, Ike, Grace, Jordan, Tony, Roman, Jamil, and many, many others that are joining us here. Thank you very much, guys. Make sure to give it a thumbs up if you enjoy the content. And thank you for getting into the chat and getting involved. So you'll notice I also put an anchored VWAP in here as well, Ty, around that 5,200. So interesting thought process here on the possibility of an evening star. And I think that as traders and investors, will want to be very well aware of how this eventuates this week. It's a shorter trading week. So, of course, how will this end up? Will it end up as an evening star? That could be quite a big negative for the markets. All right, US 2K time, very, very similar, sitting right on the support here into the open. You can see it was the first bull zone. We found buys. We sold off. In some ways, it looks like a head and shoulders tie. And you know the head and shoulders we'll be looking at in a moment because I think it's your trade of the week, or at least one of the things you've been looking up. And yeah, this is actually proofing down to the 61.8. Now, if anyone doesn't know that this is the Russell 2000, it's got, of course, weaker companies generally in it because they are smaller companies. And if we do lose this level today, it's kind of starting to predict down the possibility of a just underneath 2000 move on the markets. And I would expect buyers to be in here, at least initially, but another head and shoulders. And I think this probably brings to the chart that you want to talk about, Ty, which is going to be the Aussie 200 before we go into gold and dollar. So what are your thoughts here? Similar?
Yeah, similar. And look, the head and shoulders is actually what we're talking about here. 100% right. Like you can see it quite clearly here on the daily. I actually think it's funny that you can see exactly what I can see. I just tell you what my trade of the day is, and you know exactly what I'm going to say even without me telling you. And
we have traded alongside each other for about 14 years.
We have. But look, you know what the thing is though, and I think that's probably a lesson for everybody here though, that when you do the charts and spend enough time in front of the charts, these things become very, very obvious to you. Like they come, you see these patterns produce themselves very, very often. And when you can, it's key to actually get into them and be able to take advantage of them. After the fact, it annoys me actually when people say that technical analysis is after the fact, because we're here every Wednesday and basically every morning and every evening doing streams, showing you these patterns as they're actually being created. And that gives you the opportunity to trade them. But of course, the whole idea of being able to trade them is to be able to identify them in the first place. So it's really, really important to know exactly what you're looking for. But this is the head and shoulders that we're talking about here on the ASX 200. And look, Tom and I love patterns that have a fulfillment zone to a level where it really self-predicts and self-fulfills the next level. And we can see here that this head and shoulders pattern would go all the way down to that sort of 7550 to 7500 area, which we know is a very, very important zone. It proofs itself very, very comfortably with a lot of wick action there. Yeah, we had a lot of market movement there. And in reality, it's not even that big a move. I mean, from what we've already seen, we've seen a pretty big downward move already. All this is going to take is a little bit more weakness in the US for the rest of the week. And by golly, we'll be there by the end of the week. So, don't be afraid of numbers when it's already on the march. The good thing about a head and shoulders pattern is in order for it to actually play out, you must have a series of lower highs and lower lows. Now, that lower high, lower low sequence we can see here on the daily being the head, touching of the neckline. Then the lower high is the shoulder on the right. And then, of course, the break of the neckline, which is the lightning bolt completion. So what a lot of these patterns are telling us is the things that we're actually expecting price action to actually do, which is the lower high, lower low sequence. And once it does that, we know that we've got a short-term trend change on an important time frame like the daily. And that is a big deal.
Yeah, and this is a significant pattern again attached with all the others, so they all kind of make in that sense. All right, let's now jump on over to the US dollar because this has been a very interesting trade. And we'll go up to the high time frame here and have a look at how it's actually been trading. So recently, the US dollar hit into a resistance. It moved down to 104, which we thought would find buyers at. We've moved back up, and we find ourselves in a supply level. Now, basically, this is where we are seeing the US dollar really make its decision for the next big move. At the moment, it's theoretically in higher time frame, moving, well, not super high time frame, but medium time frames, moving down. So basically at around 105 to 105.20, which I think we talked about last week on the stream, Tyrone, we talked about this, and this is actually the supply area that we thought the markets may get back to. Now, if I remember rightly, we were finding ourselves, Wednesday here. So basically, we thought that we'd take this high, move up to around here, and then find some weakness. Now, we did do that. And what you'll notice is it looks like it's trying to go long with this little bullish hammer. I'm not sure that's necessarily the truth, though. When we look at the euro, you'll see what I mean. So what I'm looking at in the smaller time frames, because, of course, it's really great to start from the higher time frame and then jump on down, is to have a look at how the structure's actually done this. So it's been making a series of higher highs and higher lows. And that changed yesterday. So that changed over the last 24 hours. It made a lower low. It changed trend towards the downside. Yes, it rejected with the bullish hammer, but then it came back up, and around here is where it's starting to find a struggle. Now, this is exactly where you'd expect it to struggle. We put a fib from here to here. It's going to be about probably about 50, 61.8 fib. And around this level here, I think if we find another low take tie, something like this here, that this actually might go and make a new lower low. So for the dollar bulls, it is a very important time. Dollar bulls getting back up above 105. I'd say they've actually won, and this whole thesis is over. But for me at this stage, I'm thinking anchored VWAP, supply, key level, change of trend towards the downside on some of the smaller timeframes yesterday. What are your thoughts here before we go to the euro, Ty?
Yeah, it's extraordinarily important, this level, no question. And look, if we didn't have the US market looking like it's going to weaken, I would be probably all for the continuation of the short. But the only caution I would probably give is that the fact that there could be a little bit more weakness in the US economy itself, just through the indices, might see the dollar rise a little bit. Now, it's not a perfect correlation, so they could easily both go down in sympathy. But most recently, the dollar index has been really doing the opposite of what the indices have been doing. So that's the only thing that I would be careful of. In normal situations, I would be all over this, because you're right, it's at a really, really key level. And I think going on to the euro does look like it wants to go long. But the only cautionary point I would make about that is that we are on the verge of maybe tipping over a little bit on the indices. We're starting to see weakness kick in there, and that may well propel, like you said earlier, the dollar index up to above $1.05. And if it does that, this whole little project is over. I wouldn't want to be in that way of momentum, that's for sure. Because if it does that, it really opens itself up, and I think the euro might end up at 106 in a very big hurry if that happens.
Yeah, it's a bit of an evolving situation, similar to what we're seeing with oil, with up, down, all around. So I've looked here at the euro, and I kind of feel like up here above 108.61, that would be kind of a more bullish catalyst for euro today. You can see before we had like that flag style pattern kind of forming. We've come down, we've tested, we've obviously gone underneath this trade zone. So if we go back above 108.61, I feel like that's fairly bullish for the euro, at least on the small timeframes. So yeah, very important that it does find that extra strength in it. 2-hour chart, you can see here, has become extended to the downside. So you can see I've got the little Apple sign, which basically on this particular indicator, which one of my ones, basically what it does is it just shows you a little bit of extension. So whenever you've got this kind of, over exhausted thing, if it does go the opposite direction, that can mean more significance. So yeah, downward trend line, breaches it to the upside, comes back and retests it. A lot of people would have stop losses under here. I could see them getting taken out. So if we do get that reversal up here, change the trend towards the upside, then yeah, I'm kind of feeling the euro. And I guess in terms of my trade of the week, when I was picking them out, the S&P was my one, but Ty, it went this morning. I posted over an X on it, and then yeah, it's already gone. So that's trading for you. Sometimes, it is about setting the alerts. And actually, I'm going to answer a question here, Ty, before we go through anymore, because Ike had a good question. It says, question for FXE, do you use any other trading platforms? And what are your thoughts on MT5, C Trader, and other kind of platforms? What do you like about TradingView as your trading platform? That's a good question. So I guess for me, I'll answer it first, then Ty can go through. So I've used pretty much every trading platform out there. And it really depends what you're trying to get. Like MT5, we started on MT4, in terms of currency trading. It was probably the main platform, has been for a long time. And it had a lot of good things. And of course, over the years, they've added additional extra little tools. Like Pepperstone has the advanced trading tools, which I believe you can get if you're a client, and you can ask them for it. And it has like some good money management kind of things in it, which I really like. I do find, though, that for, when you compare C Trader and MT5, they don't have the same level of charting that you get from TradingView. So what do I love about TradingView? More indicators, more updates to those indicators, more timeframes, more customization, better alerts, better drawing tools. These are all my opinions. Better measurement tools. And of course, to me, the most important thing is our time. And I'm all about alerts. And although you can set alerts with the advanced trading tools in MT5 and Pepperstone, I do tend to find that the TradingView is the best, because it's just so easy to set alerts, and I can have great watch lists as well. So I'm a big fan from that perspective. But Ty, what's your favorite? I mean, you've obviously been a little bit converted to the TradingView, but you used to be a big MT4, MT5 user.
I'm like a trading dinosaur. It took them so long to bail me out of MT4. I was using MT4,
Yeah.
pretty recently. I'm a creature of habit. I don't change very often, but TradingView brings all of the things that other platforms look. All platforms have got their positives and negatives. TradingView seems to bring all of the positives into one platform, like many things. The alerts, all of the indicators, the ease at which you can zoom in and out of charts, drag them across. Everything is very easy. And believe me, if I can run TradingView, anybody can run TradingView. And I think that I've got my resident expert. No one knows TradingView better than Thomas. And all I have to do is ask him, and he can actually get everything, everything that I need to know. He can fix in an instant. So that makes a big difference as well. But all jokes aside, it's a very easy platform to use. And I think it's very, very powerful because what I like about it is it can be as simple or as complex as you like. If you want it to be absolutely simple and just want to look at the naked charts, it's still the best charting software because it gives you the ability to zoom in and out, move across very, very quickly, very, very easy. Yep. But if you want to make it complex and you want to add all of the million things that actually you are able to do, it's also very easy to do that as well. So it's fantastic. It's just a really, really good platform.
I mean, just even session breaks, economic events, being able to put in their earnings. I mean, Ty, it's unbelievable the amount that have added over the years. So
yeah,
I really think it's a great thing to have Pepperstone with TradingView platform. That's just my opinion. Sometimes people actually execute on one of the other platforms and then still have Pepperstone TradingView platform for their charting. That's nothing wrong with that either. So a few people saying here they love TV worth every penny, and a few people are probably saying, well, I can do my charts in TradingView, and then maybe I execute with the Pepperstone MT5 platform.
And TradingView, listen, I think they come to, if traders ask, TradingView does, and I think that's really, really important.
Yes, that's true.
It's they really do cater to what people actually want, and isn't it like 20 or 30 million users around the world, or some ridiculous number?
Probably
like, it's
more.
crazy.
I wouldn't
It's
be
a crazy
surprised
number.
if it's more.
It's a crazy number.
It's really they're up there for sure. So they've definitely done some great things. I pointed to the replay tool as well. If you've never used that, especially if you want to get the numbers in on your system, you go back and replay markets. Very easy to do. You can see how maybe a system might play out. So I love that. The replay tool is a really great technique for speeding up your education journey inside of trading and investment. All right, well, let's go to the next one, Ty, because of course everyone's been loving the shiny metals recently, and unfortunately, the shiny metals have come off. Now, that's not to say silver's come off. So there was another question here from Grace says, gold's looking like a bear flag. We'll check that out in a moment. I know what you're looking at. Can it drag down silver down? But silver can be quite strong. So yeah, as we've talked, and I've kind of waffled with Tyrone about this quite a lot, we've been discussing the idea that silver's strong. Now, this is another reason why you might also like TradingView. You type in silver versus gold, you can see here that the ratio, that is silver increasing against gold, has been strong. And we first started talking about this in April. And basically we were saying, well, silver's going to have to play catch up to gold because they do usually move in uniformity. It's kind of like the old Bitcoin Ethereum case. Bitcoin was way in front of Ethereum. Suddenly the ETF came out about it. Well, SEC ETF came out about a week ago. And now Ethereum's coming back in ratio. Same thing with silver gold. And if you actually zoom this out a bit, you'll notice that 0.01 or 0.15 area, this actually has been a very consistent level that silver has gotten to against gold. So it's playing catch up. Now, in terms of the charts, I do usually look at gold as the better overall lead. So I know silver's strong at the moment, but I do look at gold still, and I think Ty does as well. And when I look at this on the chart, I see supply here. I see a weakened market that's come back to the most traded level. I see real possibilities of here and even lower as possibilities, still being in a bull trend, because you would know that I am a bit of a gold fiend at the moment for sure. But I am bullish on gold. I think central bankers they're not going to stop buying it, and they're buying a lot of it. So that's good. But yeah, from a chart perspective, I don't see something I like to buy here unless I'm positioning for a longer hold, Ty. So I love the most traded level. Don't get me wrong. That's the most traded level. It's good. But do you see a bull here, Ty? Or do you say, maybe wait for something like that? We see that. Nice.
Yeah, I see the flag. I do see the flag.
So this is the flag.
Yep. Yep,
That's
and
proof.
it's even clearer. I mean, I look at it on a daily. On a daily, it looks extraordinarily obvious.
Mhm. Okay.
What could potentially happen here? We've got MACD divergence, big time.
Yep.
Yeah, MACD divergence, no question about that. Flag off the second peak, no doubt about that.
Oh,
And really, I think that even though there is support at 2280, I believe that if it gets cracking on, I think you're right. I think it could go through it.
mm.
And the flag
It's
almost demands
super.
the 2180.
Yeah, this is a super, super concentrated trade.
Yeah,
So
absolutely
when
it
we
is.
first started talking about gold a long time ago, it wasn't traded. It wasn't invested in. Everyone is going copper. Everyone's going silver and gold right now.
Mhm.
And it became concentrated the other day. So this is a real possibility to get it back down to that 2175, 2200. I just laughed because we got that question about MT5. The indicator we're using here for MACD, guys, is actually it's called MT4 MACD, and that's because we are a little dinosaur when it comes to the charting systems, and we actually really like this
Yeah,
version of MACD.
it
Obviously,
is.
the white version you will usually see is different
Yeah.
in terms of ribbons, but this is the one, Ty, isn't it? The histogram
Yeah,
one.
we're like those little nerdy kids that have got PlayStation 5s and Xbox zeros, but they still have that little Atari 2600 that plays the
Mm.
nostalgic games
You mean
occasionally.
play
That's
ET, yeah?
that's what MT4
It's the
MACD is. Now,
worst.
we love MT4 MACD because really it is the most clear and concise way of identifying divergence. I still think it's one of the best indicators
Yep.
out there, the clearest, the easiest way to see it without having a multiple amount of moving averages on your screen. So I think it's a very, very powerful thing to have in your trading arsenal for sure. So,
Mm.
and it's very, very clear. You can see that very, very clear that the MACD divergence is there.
So
And
this is class A. So you've got your higher high.
yep, Class A bearish, love it. It's coupled with it's very very rare, Tom, and you know this as well as I do, that patterns are so absolutely clear on a major commodity or an indice or the like, and that pattern there looked very very obvious that the 24 sort of 30 area was weakening. I think 2 candles in, and then we saw the sell off. Whether this flag eventuates, well, look, I think that's going to be there is a lot going on. That the problem, for gold, of course, is it's sort of torn between indices potentially starting to flatline a little bit or weaken. Dollar index, not really sure where it's going to go. I think a lot of that's going to actually depend on what actually happens on the broader markets. But if it does go down in sympathy, by golly, 2180 is going to probably pull it like the proverbial magnet.
Yeah, yeah, yeah. I'm interested to see how it plays because when I go to
Mm,
the weekly, I see that big engulf. You know, it's a pretty negative candle. It
yeah,
generally suggests there's more bearishness to come. Of course, I
yeah.
do think that this could be a buy level. I'm looking at price action in here.
Mm,
So I know that, yeah, I know there's a flag, but I
yeah.
still know that's a big support.
It's
So
the
to
last
me,
level of defense. Yeah, it is the last level of defense
if
there, I think.
if
Yeah.
there's a turn on the smaller time frame, I might be tempted as a day trader for sure, or a
Yep.
scalper. So
Yep.
this is what a scalper or a day trader does.
Yeah.
One of the
You'd
things
be
that we've
aiming for
preached
that
for
level.
years, Ty.
Absolutely. Absolutely. And
Yeah, one
if
one
you
of
want to go longer, if you were going longer,
mm,
what you need to be aware of, and don't forget too, the 20 moving average on the weekly is right in the target zone for that bear trade as well. So, but what you've got to be wary of, and even if you're a longer term trader, what you would want to be doing here, if you're not taking profit at that potential buy level, at the very least mitigating your risk by maybe breaking even or taking a little bit of profit off the table. That's the best way to play these riskier sort of trades that can spin on a dime depending on what's happening around the world. So in that instance, you want to be maybe breaking even or taking a little bit of profit off the table, doing something. Don't just sit there and say, what's going to go through it. Damn it, I'm going to be right. It's always better to be a little bit more proactive with your trading, because if something does happen to turn around and change, at least you're going to get out with minimal loss, if any, and you may even take some profit out.
yeah, and also if you don't do that for whatever reason, then at least be watching your lower lows and lower highs. Because if it starts switching, like Ty said with the lightning bolt, you want to be paying a lot of attention to that. So as I was mentioning, we've always preached upper time frames, Ties, weekly, monthlies, dailies, and then using them to find our key levels. Then we go into the smaller time frames to place the trades. And whether that's a scalp or a day trade or whatever you want to be doing, I think this is still the best way. And actually, it's getting better with AI because positionals are going so quickly nowadays that using the higher timeframes is very handy. All right. Well, we've got gold there. We've obviously got the flag potential. To activate a flag like that, you're probably going to want to see a new lower low, but we'll have to see how it trades probably around this level here, the most traded level. So you're probably looking for something like this, and then you would be able to go get short in here towards this level here. And then if this fell through, then of course that exposes 2200, 2175. Silver, stronger, I would say, but yeah, I'm not betting against silver. Let's just say that, because I think it's very strong, and obviously I have big plans for that one as well. But I'm not buying more here, if that makes sense. So to me, it's wait and see for the next big hold. Copper also showing similar signs. It had a little bit of strength in it over the last 24 hours. Coming back down to this level here is where buyer would come back in if they're going to, and very similar. It's actually placed itself on the daily 20, and it did have some nice signs of strength. Daily 20 being the big one here. Once, twice, kind of almost 3 times, 4 times. But that's coming like a freight train down. So suggests to me anyway that maybe copper is stagnating for a little period here. Now let's go over to US oil. So this is the conundrum trade. There's been a lot of analysis here that we've done on the live show. So initially our thought process was we would get down here, and I'm just leaving these here so you guys can see how this is played out. I want to talk my story through it, and then we'll get Ty's opinions. The first thing was I actually thought this would be a great bull zone. Market absolutely smashed into it, found buyers again, and it looked pretty good. And then, of course, it faced its last challenge, which in this case was Tyron's favorite, the 20 moving average, which it failed at here with the doji. Now, as it came back down here, because of course we had the great bull zone level and we had a good entry for it, we had to make a decision. And that decision, most of the time, was that the market would make a new lower low. I've seen this set up enough times to know that. So when you're having patience and you're reacting to the market, you initially get really good entries in here. It goes well, it comes back, and you've got to make a change. And that change was, okay, we're going to make a lower low. Then we get a lower low, and then we bounce back to the most traded zone again, great bull zone. Notice we react to it to the short. Now, this one I actually expected to do better. So I actually had a short in here, and I was hoping it would go further down to the next great bull zone, being about 72. And of course, what I did was I broke even the trade because it made a new lower low. So that's what I do. And it failed. And obviously, break even, sad face, nothing much going on. But now it's gone back up to the bull side. So this becomes now so many traps that you can think of. Initial trap, secondary trap, the 1, 2, 3 I often talk about. Is it a Wyckoff bottom base? Are we about to actually blitz on US oil? Now, I've had many different opinions over the last week, but I think this is what Stanley Druckenmiller, one of my favorite investors and traders, talks about. His opinion can change. It's ultimately, though, whether he's still pulling the trigger at the right points with the right evidence. And this has been, a lot of mind games, I would say, at this price, Ty. So how are you feeling about US oil before I keep going?
I did like the changeover. I wasn't convinced, and I wasn't going to be full bear mode on it until it actually closed a daily lower than those 2 previous wicks early in May. It needed to get past, in my mind, it needed to get past those levels of a daily close. Yep. And it never did that. And I know that's why you got out of the trade. So it made sense.
So it sucked.
Exactly right. But at least it's better than losing, right? Because that's what we're talking about: proactive trading, absolute proactive trading. But once it did that second candle close, that was a pretty bullish sign that it reversed and closed higher. Once we had that second last or that third last candle, now it was starting to look really, really nice. And I think. Look, I think it's a very, very dangerous level right now because it's going to do one of 2 things. And I know that's going to sound stupid, but it really is. It's either going to shoot towards 82.50 very, very quickly, or it's going to fake everybody out and come crashing down to around 76. I don't believe it's going to stay there very, very long, to be honest. I think this is going to be a very short pit stop. And it's either going to be another trap. Oil's really trying to screw everybody over, or we're going to see an explosion up to 82.50 to 83 very, very quickly. And that can happen literally overnight. Like we might be looking at this tomorrow morning and seeing it there. So it's a very, very precarious level. Yeah, very precarious level.
It could go like that really quick, or this. It's not 100% clear. I mean, if I was arguing, I'd say it's bullish right now, even though it hasn't, because it closed above the daily 20 and stuff. But if I was arguing, and that pullbacks would be met by bull demand, obviously it didn't make it gets this high yet. Obviously, we know where we think it should go, which is up in this target here. But I agree, it's a ferocious trade right now that's going to come out because there's a lot of shenanigans, there's a lot of trapping, and oil is probably one of the sneakiest trades that I've seen in a few months. Actually, it's pretty sneaky around this price. And I guess that's the fun thing about trading and investing sometimes is it's a mental game. And from a psychology standpoint, sometimes you've got to say, would you change anything? And the reason I said that story before is because we've obviously been here, analyzing this for weeks, and I wouldn't change anything. I like this. I liked my
Yep.
decision here. I like my decision here, and I like my current decision. Did I make anything out of this trade? No. Did I lose anything? Very minimal on this trade that I initially entered. So
Yep.
that's okay though, because that's exactly how I would do it again. And that's very
And,
important.
and that's the advantage of having and being retail traders.
Mm,
And that is that we can actually change our mind on a dime.
that's true.
If the market does X, we can do Y, and if the market does A, we can do B. And I think that we can make that decision very, very quickly. And I think to be a good trader, you have to be agile and you have to be able to actually take your biases aside. Like even if you had an opinion that oil's got no business being above $80 or $77, and you think it should be back at 70. You need to be able to put that aside and say, you know what, I'm going to trade what I see, because trading what you see is that's what's going to differentiate traders who are going to be profitable and ones who are going to be hoping to be profitable. Because if you let your biases, it doesn't matter whether I want oil to be at $50. Why? Because then we're going to be paying less on the at the fuel pump. I want it lower. I don't want it at 80 or 85. But by golly, if it keeps going up, you think I'm going to short it? Nope. I'm going to go with what the market tells me. And I think it's really, really important to actually make sure that you do keep your biases on the sideline when you are trading and not let them interfere in what could be potentially a good trade. Because sometimes, even if you choose not to trade it, you're going to be potentially leaving good opportunities on the table. Because when they set up from a technical standpoint and they make sense, regardless of what you think or where it should be, you've really got to trade what you see. And I think that's probably the advice for tonight, Tom, that trade what you see, not what you think.
Yeah. Not what you think, guys. We are like the best bit of information I was ever was given was that we are given limited data inputs, and it's very difficult for us to make decisions that are better than necessarily the AI and the robots that are out there with all of the evidence that they've given. So because we're given little snippets, price action is the ultimate key. It's what we see, it's what the market's doing, it's the ultimate truth, realistically, because it's doing what it's going to be doing. So I totally agree with that statement. And I think that sometimes we get these opinions, Ty, and they're not actually based on the right amount of evidence. And if you did have the whole, let's say, case in front of you, you might make a totally different decision. And that's why price action is actually in many ways showing you the correct truth. All right. So we've got that US oil. That is a sneaky one. We have gold, obviously, potentially flagging here. And then, of course, we do need to probably discuss the big stock at the moment, which is Nvidia. Now, this is, and maybe I'll even put GameStop in there, Ty, because it's kind of getting a bit rampy. It'll be interesting to see how it's pushing this morning. So Nvidia, very good at earnings announcement. Obviously, it's the darling of Wall Street. And there's an interesting stat here, Ty. It's the third largest company now in the world. I think it's got an incredibly, I think it's actually going to be number one by the end of this bull cycle rally. And it's not that far off it, but what a rise through. Now, when you get into a trade like this is a momentum-based trade. They are difficult, in my opinion, to manage risk on. And I guess that's why I just want to bring it up. Look, if you get into it early, has it shown you a sign of turnaround? Ty, do you think there's a sign of turnaround here yet?
Of weakness?
Yeah.
No, not at all.
Not exactly. Well, that's what I want you to say. So
Yeah,
I was hoping you'd say that.
Yeah.
Yes, there's no sign of weakness.
Two massive gaps. It's kind of like it's just ramping. But you're right, though. I mean, that adds an extraordinary amount of risk. If you go long here, the rebound could be awful. I mean, it's very possible that those two gaps could be closed in one candle. It's a very dangerous area to trade. No question about that. Yeah, look, earlier on around the start of May, when it was higher, high, higher, low sequencing in a very orderly fashion above the moving average, that was happy days. That's proper technical trading. But once it broke through and did that first gap, boy, oh boy, buyer beware there. I mean, and that's not to say that's not going to keep going to 1500. Like, it may well just keep going, but it's still a dangerous trade. It's a very difficult trade to manage risk on efficiently, because the rebound could be extraordinarily violent. And that's where there are just some trades that you want to watch and enjoy the spectacle. And I think this is one of them for me.
Yeah, if you're in early, you keep it going and you descale your position and you keep riding that trend. You ride that trend into the stratosphere, into the moon, Mars, Jupiter, Saturn, and Pluto. But the thing is, Ty, at this point, that's not, if you're not in it, it is dangerous. And I think this is where a lot of traders and investors, and I'd like to hear from you guys in the chat, whether you've come undone from this trade. Because a lot of people get in, they buy Nvidia, they get hyped. The next day it's up, they think, I'm a god. I'm a god.
Yep.
I'm a winner. I'm the best. It's so easy. Yep. But the problem is that they have never risk mitigated. And it brings me to GameStop, because I just want to mention this, because, of course, these are the risks that we have seen several times with these types of stocks. So this is a absolute mooning position. If you get in here, cool. But then if you get in here, well, how do you risk mitigate this? Well, you can't unless you use an option. It's not really very cheap, believe me. Then it gets up here and actually went even higher, went to like $80 in pre. So, and then all of a sudden, 2 or 3 days later, it's back to $20. And you might say, well, I wouldn't be caught in that. But in many ways, Nvidia is at a lesser extent hyperactive thing like this. And it could go to, Ty said, 1500, 1600. It could do it, 1400, whatever. But it will eventually get a big giant red candle on it, and it will be gnarly.
Yeah. And it may well wipe out all of the gains that you've had and take out stop losses. And I mean, that is not even jumping on board a moving train. That's actually, getting a helicopter to actually land on that moving train. It's going so quickly. That's not being late to the party. That's so far beyond that. So, and that's where you've got to be really, really careful. Pick and choose your battles, I think, is probably the way to approach that sort of trading.
Yes. Yeah, it's the next level of your evolution as a trader and investor and everything. You pick when you sometimes have edge, but it just doesn't make sense to take that trade, because you've got edge, but the risk reward doesn't make sense. That is when you know you're on the right path towards, I believe, a huge turning point. We've looked at 10 or 15 really good opportunities in this webinar alone. There's no need to be trading Nvidia. Not at this point. So GameStop, you can see here, interesting point. Now, the reason I say it's interesting suddenly is because we saw this. Now, obviously, it's a long leg doji. Don't get me wrong. But it actually went up to this price of 23.78, came out of nowhere, of course, and had that bit of a resurgence. And because this is a key break, because it was where we were seeing that kind of strong put action, and this is mostly an options thing. So obviously we're trading the stock in advantage of the options. I think it suddenly came alive. And I think that with any one of these kind of positions, the only way you can really make money is by putting a certain level of risk on and saying, okay, I buy it down on these lows and I wait for that next kicker. And this is just a case of that kicker coming through. I actually think there could be a little bit more in it, Ty. Purely, it's very speculative. It's gamble. I wouldn't, I don't actually position in this. And I don't suggest you do under any circumstances unless you know what you're doing. But to resurface again, a lot of the time with these types of trades, they tend to go, the second time like lesser, but they do tend to come through. So could be a second little injection. Certainly the types of signs we saw in the past with AMC, GameStop, and others. So interesting nonetheless.
I think I call that a popcorn job.
All right, let's have a look at Bitcoin. I thought we got Bitcoin after you said Bitcoin. Let's have a look at Bitcoin. So anyway, this one here is actually doing something that I don't mind. And what that was we got that strength. And we talked about the idea that if we pop through here, we were probably going to make it to 72. We did. Fantastic. We sold off. We hit into this level of demand. Now, between here and here is my level of current demand. Basically 66 to 65. This is where I think the buyers sit on Bitcoin. Now, if the markets do rally through 72 again, Ty, especially if this coils. So what I actually wouldn't mind, and a lot of people won't like this, but if this does happen and then it goes past 72, I think it's going to explode big time.
Yeah, I
Like go
agree.
wild.
Yeah.
That
I
would be
think
wild.
a break of
Big coil.
72 this time could see, high 70s to 80, and I think it could
Well,
happen
yeah.
extraordinarily fast. Yeah,
Hmm.
it's if you especially if we get a coiling effect like you've drawn there,
Ooh,
always be wary of the
wild.
pullback to the 20 moving average, and then the launch up. It's a wild ride, and that level's extraordinarily important. 72,000, no question, but it's tested it. It wouldn't want to be back at 62, by the way. It'd want to be holding up at this level. I think a move back down all the way to 62 puts it in danger again of actually falling through that floor. So it needs to be holding in order for the momentum to shoot through the tops here. That 20 moving average needs to do its job, and it needs to hold everything up and go sideways. But I wouldn't enjoy a 62 again for the long opportunity.
Yeah. So Jamil says here it'll be range based on the volume. Yeah, I agree. The volume's actually been dropping as well across some exchanges on Bitcoin. I think the alts are probably coming alive a little bit at the moment, though I haven't looked at it too much. Ethereum obviously is the first, and then usually get your alts. Actually, you know what? I'll have a quick look at ADA USD just for a second here. I'll just use anything just to bring it up on the charts for a second here. Yeah, so something like this still not doing anything, but as we all know with the cryptocurrencies, eventually the alts, this is just one example, but there are many of them, eventually come through. So we'll find out when that's going to be. All right, guys. Well, it's time for your questions. We've gone through the majors. We'll obviously cover odd US dollar as well, because I know that is generally a question that we get, Ty, which is, can we cover odd USD? Which of course we can. And at this point, it's similar to the euro. It had a stronger break the other day to the upside, I feel. But I think that like anything in between 65 and where it is now, all of this could be buyers. And at the moment, being the dollar index is kind of trying to find that strength. I think it's a wait and see how the dollar index ends up.
Yeah.
I believe Aussie's long here from the action that I'm seeing on the chart. But yeah, I probably think that the dollar index is the key to both this and the euro.
Yeah, 100%. Yeah, I agree.
Michelle says, can we have a look at CGen? We can, but I think CGen is generally outside of one of the stocks that we generally do look at here. So again, from just a TA perspective, we'll just use it from a TA example. When you look at a stock like this, or any stock in general on the Pepperstone platforms, then you can go and you always want to go higher time frame. So something like this one you can see is very bad for a long time, and then all of a sudden it broke out. Now, when you base, the reason I bring this up is because I had a suspicion it might be here. When you base, often people call it cup and handle as a pattern that's very, very well used or very well thought about. And this is that type of style of pattern. So basically, you've got that huge basing, you've got this acceleration, probably news related, some kind of earnings announcement. And then you get this handle component. And of course, noticing that we have this and then a wick low and then a rally up, that does give a bit of strength to this stock. So I would say that looks relatively strong. But the reason I mentioned cup and handle is because I want to go back to gold. And I want to show you another giant cup and handle, which is, of course, this one here. So that's that huge base, this massive handle, and then this huge acceleration. So I'm not a huge cup and handle trader, but I have seen a few of them in recent times that have been pretty good. And like anything, and it could be considered a Wyckoff as well, Ty. I mean, all these patterns just kind of blend into one, really.
I think for CGen, look, probably it needs to break through $3 to convince us that it's going to go long. If we get that break above $3, probably short-term trading, you might take it up to $3 as a bit of move from here, so about a 50-cent move. Then after that, look, sky's the limit if it breaks $3, I think, for CGen, Michelle. So I would be looking at $3 as the initial target. And if it breaks through there, it might be happy days all the way to 6.
That would be pretty amazing for a stock like that. Certainly looks to be possibly based, though. You'd also want to do a bit of volume analysis as well on it, which is one of the reasons we do like TradingView platform. A lot of volume analysis tools. Yep. All right. Well, Ty, that brings us to, I guess, the end of the show. We had some great questions there today. We had some great interaction from you guys. So thank you so much. Give it a thumbs up if you enjoy this type of content so we can keep bringing it to you. And as always, I guess, the big thing for this week will be, I believe, watching the US 500 at 52.50 and watching the dollar index and how it trades over the next 24 hours. Everything's kind of sitting on support here this morning. 52, 60, 75 is kind of support for the US. So it's made a large move through the futures action. Now we'll see its true intentions. From myself, Thomas, and Tyrone, I guess we'd like to say thank you so much. Make sure to sign up in the description if you want to keep viewing this. And Ty, do you have any words of wisdom to leave everyone with this week?
Just trade what you see.
There you go. That's the one, guys. All right. We'll leave
Thanks,
you with
everyone.
the disclaimer. Thank you, guys. Bye.
See you next week. Okay, bye.